Every tax season, business owners face the relentless pressure of the annual filing deadline. Many assume their Form 1065 or 1120S must physically sit on an IRS desk by that exact date. Form 1065 and 1120S are the standard informational tax returns required for partnerships and S corporations. For those business structures, the standard deadline is March 15th. However, federal tax law dictates that when a deadline falls on a weekend or a legal holiday, it automatically moves to the next business day. In 2026, March 15th falls on a Sunday. That calendar anomaly shifts the legal deadline to March 16th. When that Monday arrives, millions of physical business filings converge on government processing centers at the exact same time. The true anxiety of this deadline comes from the logistics of physical delivery rather than the taxes themselves. Fortunately, the law already has a built-in solution for this bottleneck. That solution is Internal Revenue Code Section 7502. This federal statute is commonly known as the Timely Mailing Treated as Timely Filing Rule. Under this statute, the date stamped on your envelope by the Postal Service acts as your official filing date. The IRS can open the envelope days or even weeks later, and the return is still considered on time. The rule has strict limitations. It only applies if you use the United States Postal Service or a highly specific list of IRS-approved private couriers. Handing your tax return to an unapproved overnight courier immediately voids this protection. If the package arrives late, the IRS legally classifies your return as late. By following the exact mailing guidelines, the government allows an envelope in transit to be legally classified as already delivered. Some business owners operate under the assumption that if their company owes zero taxes, a late return carries zero consequences. They are incorrect. This diagram breaks down the penalty structure for late informational returns. The IRS assesses a penalty of $255 per partner or shareholder per month. For a business with 3 partners, that creates a compounding penalty of $765 every single month the return is late. Relying on the mailbox rule comes with a hidden hazard, the machine postmark. Dropping an envelope into a blue mailbox at night no longer guarantees it receives a stamp with today's date. Under new USPS postmark rules taken effect in December 2025, automated stamps applied at regional processing facilities can happen a full day after you drop off your mail. To defend against an automated delay, you must go to the post office counter, ask for a manual postmark, or use USPS certified mail to secure an official, time-stamped receipt. A single-day delay inside a postal sorting machine can trigger that massive, compounding penalty. A physical certified receipt is your legal proof of exactly when you handed over the documents. This chart shows exact IRS mailing addresses based on asset size and location. Businesses over $10 million must route paperwork to Ogden, Utah, while smaller businesses send theirs to Kansas City, Missouri. Navigating this geographic routing complexity with physical paper introduces completely unnecessary risk. If the March 16th deadline is too tight, the safest tactical move is filing Form 7004. This official IRS application grants an automatic extension, moving the due date to September 15. This diagram illustrates the Profit First framework. Profit First is a strategic cash management system that allocates total revenue into separate accounts for specific purposes, cleanly splitting the cash into profit, taxes, operating expenses, and owner's pay. Because the Profit First system forces businesses to fund tax liabilities continuously throughout the year, the financial panic surrounding the March deadline disappears. The cash is already waiting. The most reliable approach is to bypass the physical mailbox entirely through electronic filing, and to partner with professionals like JD Business Consultant to implement these proactive financial systems. You master the March 16th deadline by building a solid financial structure that turns tax season into a predictable routine. Midnight trips to the post office become entirely obsolete.